Hey folks, and welcome to the Pipnotic Symposium for the 3rd of September 2021. A little bit windy upstairs today, so my apologies for any wind sounds hitting the microphone. So today we're going to focus on the S&P 500 and the Russell. Just going to run through those and do an analysis and see what we can expect price to do. First of all, before we do anything, I think it's important to understand the underlying environment. We have, uh, yeah, we have people who have lost their jobs. We're in the middle of a recession, so-called pandemic, and a lot of other bad things going on. And the fact that the stock markets continue to climb is beyond me. The only real reason is stimulus money and the fact that the central banks are buying the stock market with printed money in order to support it. So, as you have guessed, this is not sustainable, and a crash will occur, and it will be a crash like we've never seen before. This is simply not sustainable, and it's been going on for too long. And so, I just be a little bit careful. You can certainly trade these, and you can obviously the bias is long, but you wanna be very careful. Um, I wouldn't leave any positions open over the weekend, just for the reasons that we discussed. Things are just a little bit too uncertain at the moment. Okay, so looking at this, what do we do? Let's go into a smaller time frame. First of all, I want you all to notice this software. Look at this. Areas formed, tested, gone. This one is fresh. This one, reaction. This one, taken out, formed this nice area of demand that removed it. It's pretty remarkable how well this software works. But looking here, you can see that we have to focus on the origin of moves. And so, if you consider it's difficult because price is only going up, and so you could just buy at market with a wide stop and hope that today isn't the day the market crashes, and you'll probably make money. But you're not going to get in a very good price. So what we want to do is we want to identify these areas that are strong enough to consume opposing pools of liquidity. Okay, and currently when I'm looking at this one here, this is the 1 hour chart on the S&P 500. The first thing that my eye is drawn to is these price imbalances, and so we have if we use our rectangles, so we have the buy side here. Oops, that was the wrong one. Here, so we have, the buy side here, and the sell side, which is setting up now. Once we move below this, then I'll be happy, but for the time being, it's looking that price is looking to have a bit of a breather. And notice that we do have some interesting areas that we could consider to buy at. We're just waiting for an area of supply to form, which has not yet formed. We also have prices going higher. We have the histogram going lower, so we looks like we're setting up for maybe a price to move a little bit lower and begin to rebalance price. And we have all these levels already marked off by the software for us. We have, let me change the color to this one. So we have this one here. Here's a price imbalance. We have this one here, price imbalance. We have this one here. We have the big price imbalance. Okay, so focusing on those already drawn. Focusing on, as you can see, where these the buy zones are for these. So we have for this area of demand, the buy zone is here. For this area of demand, the buy zone is here, because this is where price came to. This is the deepest pullback to this area of demand, which happened here, and we have this one here, and the buy zone is maybe somewhere in here. Okay, and what do we have again? We have these areas the price will gravitate to. We have liquidity voids. When liquidity voids occur, if you have like a big price imbalance, price goes up, price will always return to the origin of that move to rebalance price. Okay, because that makes the movement of price efficient. When it happens again, price will rebalance, and sometimes it doesn't come back right away, but eventually it will come back. Okay, it almost always works like that. and you see it on the 1 minute chart up to the monthly chart. And this is because price is fractal. Because so we have one here, we have one here, and we have one here. Okay, so you have three areas of demand. So demand, demand, demand below price, and we're looking to form a top at a point when we're starting to do this. And now price is starting to do something else. So once we move below this and begin to move beyond this area here, then maybe price will begin to wriggle lower from there. But we do have an obstacle in the road, which is this one here. This is an area of demand. This is fresh, how price was kind of trading fine, and then all of a sudden it popped up. I mean, this is fresh demand. We have this one here as well, how price kind of wriggled kind of strenuously higher, and then we popped up. Then this one here I like the best, which is where price came down, we moved sideways, and then we left. So this is my absolute favorite. Why? Because this is in the cheap side of the box. If you consider again what we spoke about earlier, this is 50%. Buying here is low probability. Buying in the lower end of this box is high probability. So this area here, let me move that, this area here, oh, come on, this one here is in the cheap end of the box. So this is like a discount price for the S&P. Okay, so this would be a very nice area to buy. And once this area forms, we start to see supply form. This would be a pretty cheap or a pretty expensive price to sell. Okay, so you want to stay in the correct end of the box. Okay, in the ends here. We've talked about this many times for many years, and it's exactly the same thing. And the reason I like to use boxes is because it enables us to focus on supply and demand and reactions to them. And so when you see something like this, I mean, this is demand, this is not a reaction to anything. This is demand, this is not a reaction to it. And so from this point, from this high to this low, if we have demand that forms in the red side of the box, it will be a reaction to demand. So this will be a child and this will be a parent. Okay, and so you don't trade the demand that forms on the red side. Red side you only sell at the supply. Yes, we have a couple of areas there. Let's have a look on the 4-hour. What we have. See here we have something that looks also pretty interesting. We have this looks the same, doesn't it? How price. I mean, this is crazy. How this is just like money pouring into the market. I mean, there aren't any pullbacks. Price is just grinding taller. Bit of profit taking. Discount price, push it up. Profit taking. Price pulls back. We have the same thing here. It kind of lends to this really kind of unnatural trend line thing. It looks a little bit strange, where you have it's almost like a channel here, and then price breaks out of the channel like this. Okay, and then a huge load of buying like that, like shark teeth almost. Okay, and so you could line these up. See, this is the value here. Oops. This is the value here. Price goes below value. Discount price buy. Price moves back into value. Discount buy moves back into it. Discount buy. Now we're currently in it, and so we'll see what happens. Maybe price will move back down to this discount price at an area of demand somewhere in here, and then continue back up into the area of demand here. Value. So this is what we have here. So I would certainly look for a deeper pullback, and if we try to find one, you can see that we have something here. How we actually have like a pretty nice. It's probably clear on the 1-hour. Yeah. So how we had divergence. Not very clear on this one. So if we go to the 30-minute chart, we'll probably be able to see it. Okay, so if we go back here and have a look, and so we don't really have any divergence, but you do have kind of something similar. You have price kind of moving higher, then you have a really strong push lower, a really strong push higher, and we have price moving back down, trying to identify the area of demand that's responsible for removing this supply here, and then continuation higher. Okay, so this is a really interesting area to buy right here. Oh man, come on, this area here is nice. Okay, and this is also nice down here. So if we remove these and just have a look at those, They're pretty far above price, but should price come back down to this area here, I would be very keen, because this one here is almost rebalanced. This one here is not even close, and so I wouldn't even consider doing anything up here. I would wait for price to return to the origin of the move that was able to move beyond. So we had, just to cover that little, once again, we had something like this. Price went higher, we removed this supply, okay, but it came back, so it didn't hold away, okay, and this is a leg that moved and traded beyond this area of supply, and the origin of it is right here, Come on, you stupid app. Right, there we are. Okay, so this would be a very interesting place to buy, so I would certainly look to buy at that area there. All right, let's jump to the Russell. I'm going to do 2 of these today. Keep the video small. Go to the daily and have a look. Let's go to the weekly, maybe. My broker doesn't have a lot of data. It's a blow. So you can see that we're probably all-time highs. Price is in value. So people are pretty happy. Jeez. People are pretty happy paying these prices for this. And just notice what's happening. When you have an area of value where price is just happily trading from the high to the low, from the high to low for an extended period of time, these little bursts above like this is what I'll call liquidity exploration, where it's looking for liquidity. You can almost call it like liquidity exploitation, because they're exploiting the fact that there is going to be liquidity in the form of stops above these highs, because this is how a lot of people trade. And the fact that the market trades above those highs is simply a sign that that there are bigger positions that need to be filled. Okay, and if you don't have liquidity available, you have to find it in the marketplace. And running price to extreme price points in the market will release this liquidity into markets so that it can be used to fill these big orders. So when you see something like that, when price moves above like that, that is a negative bias. Okay, that is a negative bias, because price is moving above and then coming in. It's moving above and coming in, moving above and then coming back in. We have the same thing going on here. We just have some wicks, and so you can see the fact that price was able to stay above for a longer period of time tells us that there's thinner liquidity above than below, because when price came below, we only had a wick. So we had 1, 2, 3, 4, 5 wicks below, and here price was able to move above, trade a little while, and then come down 2 times, 3 times. But price did not snap back like it did below this area of value. So when you see that, well, that's a positive thing. Okay, and so you can see that we have a very, if we do it like I like to look at it, where we draw. So if we draw using the rectangle, we had demand just here. It's been tested lots. We don't have any supply. We have a little bit of something here. Okay, so my terminal keeps crashing, so I'm going to use a different tool. So we had demand here, tested several times. We had this here. Okay, and notice that price tested a couple times. And we're kind of gnawing away at this area of supply. In this area of demand, the buy zone is right there, where the area of supply, the sell zone is a little bit deeper into that. So this is kind of thinning out up here, and this is supporting price nicely. So maybe we see something like price moving up to the area, pulling back to an area of demand, responsible for moving this. So we have this one here, and then going through. So that could be one of the scenarios, trading at the area of demand that removed this supply just here. And this seems to be holding for the time being, and this seems to be getting thinned out. So I'm thinking the price could continue to drift higher for the time being. But we'll see. Currently, as I said earlier on, you have value, and then you have price in it, it comes down to it or up to it, and it moves in. You don't have to guess what direction price is going to go until it does it. Then you know, okay, this was value. We're accumulating the long positions. When that happens, then you have a directional bias, and that is to buy at demand, like so. Okay, so right now we have this very clear area of value, and we're just waiting for the directional bias to emerge. So right now there's nothing to do, just wait and see. Okay, good going for 15 minutes. I'm going to leave it at that. If you have any questions, let me know, and thanks for watching.